Hello, everyone. Hopefully you can all hear me clearly. I'd like to give everyone a very warm welcome to this session entitled Africa Focus, Digital, Urban and Hospitality Infrastructure. Maybe I can just introduce myself first, and then we can move on to some more details about the first segment of the session. So my name's Jason Mitchell. I'm the editor of Real Asset Insight, which is part of the Real Asset Media Group. So we primarily cover European real estate, but we are increasingly covering other parts of the world, including Africa. I actually live in Africa. I live in Malawi, I've been there the last 7 years, and before that I lived in Latin America. So I'm fairly familiar with real estate and financial matters from the developing world. In this session, we've got two guests with us. We have the Honourable Judith Nabakoba, who's the Minister of Lands, Housing and Urban Development in Uganda. So thank you very much for joining us today. That's very kind. And we have Anna Claudia Rosbach from UN Habitat. So thank you very much, Anna Claudia, for joining us. So this first segment is entitled Urbanisation Policy and Housing Supply. And really its purpose is to set the strategic and policy context for real estate development in Africa's fastest growing city. This segment establishes how governments and institutions are shaping housing supply, land use and urban growth, and what this means for investors. So we're going to look at rapid urbanisation, housing shortages, land policy, planning systems and permitting, public sector priorities and reform agendas, and creating an enabling environment for the private sector. Maybe if I could start with you first, Judith. What would you say is currently the biggest barrier to developing housing at scale in African cities? And maybe you could just start by introducing yourself a little bit and tell us about your role, and then move on to answering the question, if that's...
Thank you, Mr. Moderator. I'm honored to be here with my sister, Anna Claudia, Executive Director, UN Habitat, whom we have worked together for now some years. I want, first of all, to express our gratitude as Uganda for the invitation extended to us by MIPIM. I did not move alone. I have a colleague, a minister who is here, Honorable Cho Fakabuye. Could you please wave to the people? That is a minister from Uganda, Kampala Metropolitan Affairs, and other colleagues from the private and public sector. Could you please stand up so that people know that Uganda today is highly represented? Executive Director, Kampala Capital City Authority, the President Area Uganda, and your teams. Once again, we welcome you to this important meeting. This is our first time to attend MIPIM, and I think it is the first time for Africa to begin being visible when we are talking about matters of housing. As they have already told you, I'm Judith Nabakoba Nalule, Minister of Lands, Housing and Urban Development in the Republic of Uganda, but I also chair the African Union Specialized Technical Committee number 8, which is on local government, decentralization, public service and urbanization. And as the chair of that committee, I chair also a subcommittee on urbanization and housing as a Minister of Lands, Housing and Urban Development, where we meet with colleagues from the African countries to discuss matters relating to housing and urbanization. African population is about 1.5 billion and is projected to reach 2.5 billion by 2050, with urban population nearly doubling. And in Uganda, we have a population of 45 million people, and our growth is around 3% annually. The question you have asked today, which talks about the biggest barrier to delivering housing at scale to African cities, I would say that across Africa, the housing deficit now exceeds 50 million units, and about 80% of this deficit is in what we call low-cost or affordable housing. This makes it clear that real challenge is not demand, but the ability to deliver affordable housing at scale for our people. And the challenges come because of the high financing costs, the shallow mortgage markets, expensive building materials, infrastructure gaps, but also the slow land and regulatory systems all continue to accelerate the cost of a housing unit in many of our countries, including Uganda. Mortgage lending rates normally are very high, to a tune of 16% and above, while household incomes remain low in Africa to afford what we call formal housing. At the same time, the government subsidies and guarantees remain limited, reducing the support available to the household, but also the confidence needed by investors. The policy priority, therefore, is to reduce the structural cost of delivery, but also create the right conditions for affordable housing supply at scale. We believe that once the right policies are set in place and also the right incentives, then we can be in position to address some of the so-called barriers or challenges to housing in Africa.
That's fantastic. Thank you very much, Judith. Maybe Anna Claudia, you could answer that question, please. So what currently is the biggest barrier to delivering housing at scale in African cities? And maybe you could just begin by telling us a little bit about your role in UN Habitat and then proceed to answer that question, please. Thank you very much.
Sure. Thank you, Jason. Thank you, MIPIM, for having me here, having us here for this panel. It's a great pleasure to be with my sister, Judith. We have been together, for a while now since I took the position. I'm the executive director of UN Habitat. UN Habitat is one of the two UN headquarters located in the Global South, located in Africa and based in Nairobi, together with the UN Environmental Program. I took this position 1.5 years ago, and I have to say that I have been observing, a major trend in terms of, looking at housing as with centrality from the policy level, the national level, but also at the local levels in Africa, and also growing interest from the investment communities. I think there are a couple of barriers. Judith's minister mentioned land. Land is one critical barrier, not only for Africa. Land is one of the main bottlenecks for affordable housing globally. Of course, in Africa, you have the context, the customary rights vis-a-vis the legal frameworks and more contemporary, and this is, you have the informal settlements, but I believe some countries, cities, you in Uganda, Kampala, are doing a great job in planning the informal settlements, embedding the informal settlements in planning and unlocking this land as well. But I would say, Africa is going through this accelerated urbanization process the minister was referring to. So we're going to have hundreds of people coming to cities. And cities right now, they face already many, many challenges in terms of infrastructure. In average, 50% of the urban population in Africa live in informal settlements. So there are current infrastructure gaps that needs to be overcome. And the fiscal constraints that the minister was referring to, the subsidies and the incentives are limited. So I believe we can look at these two layers at the national level, unlocking the finance, making sure there is more finance allocated, making sure that the subsidies, are focused. And then at the local level, the city planning, the process of unlocking land. Because at the end of the day, the private sector investors, they need a certainty, right? So the regulatory framework needs to be clear. I was talking in the other session, the rules of the game, they need to be clear. Otherwise, the private sector will not come. So there are barriers, but there's also a strong trend into overcoming this barrier. Important example is that now in April, we're going to have, for the second time in history, an African Urban Forum. The first edition was in 2004 when we first met, and I was amazing to hear, the diversity and the variety of experiences at the local and the national level to boost, the urban development and also to boost the housing sector.
Thank you very much. I think one of the key considerations is how governments balance affordability with commercial viability. So basically, obviously, Africa needs a lot more affordable housing, but how can that be developed at scale in a way so that the private sector can make some kind of reasonable return? Because obviously they're just not going to invest unless they can make that kind of return. But Africa has a crying need for affordable housing. So maybe you could answer that question, please, Judith. And then
Thank you so much. We know that it's quite delicate balance when we talk about affordability, then balancing, and also looking at the need. I would say that governments across Africa, they are trying to make housing more affordable while maintaining the commercial viability needed to developers, but also investors to build at scale. This is critical because Africa's housing deficit is still now at 50 million units. But remember I said 80% of that deficit is in what we call the low-cost housing category. So the challenge may not necessarily be demand, but how to deliver on affordable and low-cost housing at scale. Governments are now responding by reducing the structural costs of housing delivery through what we call serviced land. When we talk about serviced land, when land is available, then utilities can be extended. Water, electricity, road network, and we believe that by governments responding that way, it will reduce the structural cost of a housing delivery through serviced land, but also in structure investment. And targeted incentives, housing finance, then we talk about the reforms, then the private-public partnerships are very key, and also more efficient land registration, but also regulatory systems in some areas. We believe that they are also investing directly, government is also investing directly in what we call now social housing for the vulnerable and low-income groups. And at the same time, the use of housing technologies. We believe that maybe technology like prefabrication can help, the steel-based systems and other alternative building methods are also growing across Africa. This will help to reduce the construction cost, the time which is needed, but also improve efficiency, limit waste, and also lower the cost where every user can get a house, or what we call a home. We believe that once that is handled in that way, we can be in position for the investors and partners to get what they call return on investment, because it's like a public-private partnership.
That's great. Thank you very much, Judith. What's your opinion, Anna Claudia? How do you feel governments can balance affordability with commercial viability? How can we try and square that circle, please?
Yeah, I think there are two ways. From one side, looking at the finance that is available, or making finance available, and I will give an example. And the other side is looking at the typologies, and looking with a diversity of typologies that can be more affordable, right? One example that I can give in terms of innovative finance is the example of Kenya. Kenya has launched a housing levy and has been able to build more than 200,000 houses in the last couple of years. This is an amazing achievement, I would say, leveraging only domestic finance. So it's a very interesting case to be observed, to be monitored. I think many countries in Africa are very interested in this model. They have been traveling there and looking at it. And it's interesting because the levy is directed to housing, so you can see, directly how it's gonna, be invested. It is combined with public land, and I have to say, well-located public land. Let's say in Nairobi, one of the projects, the Mukuru project, is a premium location very close to the CBD. I also visited one of the projects in Kisumu. I think all of them are well located. So it's really deploying prime land, which is also things that, other mayors are doing. Yesterday, I was in the Housing Matters session, and I heard many mayors involved in identifying public land and allocating for housing. The mayor of Paris is doing that here in France as well. So land, as she said, with innovative and local-oriented finance systems, because we cannot expect, to have the full-fledged financial housing finance model eventually, but we can build an increment. We can build it incrementally, yeah. And coming also from Latin America, what I observed is that Latin America, in many countries, they do have their specific housing finance systems that are not equal to the European, not equal to the North America. They have been working for the last years, right? So the point here is really adapt to the realities and the context and build on what we have. The second aspect is on the typologies. And the other example that I like very much from Africa is from South Africa, the backyard dwellings. It's a way to provide, units, backyard units. They have a double function because, actually a triple, because one is really, supporting the owner of the house with an extra income. The second one, you house people that need, sometimes it could be migrants, could be young people or so on, transitory housing. And the third effect is, you activate a whole sector of small, medium enterprises, SMEs, because we usually think about the big private sector, but the private sector is very diverse, right? And it costs less. So it's not the same price as a full-fledged home. So incremental housing or subdivision incremental housing is also a trend that we have been observing, not only there, but in other places as well, in Latin America, but even here in Europe and in North America.
Okay, that's great. So we don't have much time left for this this segment, but quickly, Judith, do you think there's any particular policy reforms that the government can do to improve investor confidence, please?
Of course, the policy reforms are always there, and I would think that improving the investor confidence, we need reforms that can reduce risk. And we also need reforms that can improve predictability, but also shorten the time for one to make a house, like from the planning to the delivery of a housing sector program. And I would give an example. We have the National Housing Company. You realize that for them, you would find they have land and they have the plans already in place. So if an investor or a partner comes and engages them, then they are already bankable projects that can be undertaken. And with that, you realize that time can be reduced in one way or another. Then another thing, we need to work on what we call clarity on land ownership or land tenure systems to make sure that the policies, the legal framework is favorable, very transparent, the approvals are very easy, then the stable housing policies, all that can help when it comes to housing. And we believe that planning is also very key when it comes to investors, because investors want to invest where they feel they are safe, they are secure, and they always get what they call return on investment. We are looking at also the public-private partnership frameworks, whereby we work with the private sector to deliver what we call affordable or low-cost housing. Then also credible government commitments and consistent enforcement of the contracts. In short, the strongest confidence signal is a policy environment that is transparent, that is stable, that is efficient enough, but also make affordable housing projects bankable, because they need to be bankable. When we talk about affordable housing projects, they need to be bankable and achievable.
That's fantastic. Thank you very much, Judith. That was very interesting. So I think we'll move on to the second segment of this session, if that's okay. So thank you very much, Judith. Maybe the other panelists could come up now, then, please. Thank you very much. Okay. If you stay, yeah. Sorry? Yes, I think we probably did meet you again. Okay, so if we move on to the second segment of this session now then, please. Now, this session's entitled Delivering Bankable Residential Projects, and it's going to focus on private sector investment opportunities in African residential real estate. This segment really examines what makes projects commercially viable, where institutional capital is flowing, and how public-private partnerships can unlock scale. So the key themes are going to be private sector investment opportunities and entry points, public-private partnerships, structure and success factors, risk-return profiles across affordable and mid-market residential, and de-risking mechanisms and exit strategies. Excuse me. The speakers during this session, we have Anna Claudia again, and we have the Honourable Kabuye Kiofa, who's the Minister of State for Kampala City, Capital City, and the Metropolitan Affairs. We have Samuel Kariki from Mivida Homes. So maybe I could begin with you, Honourable Minister, and maybe we could start by you telling us what you think bankable means in African residential markets today and what has achieved in recent years. So I think the question there really is what makes a project bankable in an African context, and whether that might have changed during recent years, please.
Thank you very much. My name is Kabuye Kiofa, and I'm a Minister of State in charge of the capital city, Kampala, and the metros. I thank my senior minister who has elaborated on the preliminaries, especially when you look at the opportunities which accrue from the challenges we have, which I don't want to call them now the challenges. Sometimes I tell people these are now the better opportunities or the better problems to address. For the case of Kampala, which is like any other city, Nairobi, or within the region, here you're speaking about projects with a good location. You're talking about bankability, which is looking at far more comprehensive certainty for investors and scalability for cities. When I give an example of Kampala, we are a city with over 4 million people, which is projected to go almost up to 10 million people in the next 10 years. And this explosiveness, this growth is because of the immense, first of all, the peace, which has been with us for the last 40 years. The example here is between 1886 to 19, when colonialism was setting in our country, to 1986, those are 100 years. The population in 1886 was just 2 million people within this area, estimated then. By 1986, it was 12 million people. Now you find that for the 100 years, the population grew by only 10 million. But between 86 to 2026, which is 40 years, the population has grown by 33 million people. That's why you had my minister saying we are now 45 million people. This is almost similar across all cities in Africa, and especially within my neighborhood, Nairobi, Dar es Salaam, and then others. So this is because of three things. One, peace, stability, security, and health conditions. What does this mean? It means there is an increment in demand for social services, including housing, and because of that, the demand seems to be elastic in response to supply. So when you look at the two, you may find that the correlation coefficient is negative at this rate. So what do we need in this area is premised on three issues. One, which are non-negotiable. Clear land tenure systems, which the minister talked about, where the investors need to come and be able to understand who owns the land, how can they access it, and what are the user rights, the both rights, user access rights, and then they can put in their money. Two, what are the supporting infrastructures, the neighborers? This is where I'm speaking about roads. For the case of Kampala, you're talking of 3,700 square kilometers of roads, kilometers of roads, of which now what we've done so far, we've planned to work on 600 kilometers of roads, of which 300 are done. Now we are planning for the next 300 between 2026 and 31. Then the other issue will be the non-negotiables, verifiable housing demand. Like I said, the demand here is elastic. Now we are going to economics, and the supply seems to be inelastic because supply cannot match with the number of the people which are coming on board. So those are the issues which must be addressed, but these are all opportunities for everyone around so that we can come and sit on the table. The other side, government provides the enablers, which I talked about, and then on the other side, the private sector try to bring in your capital, which will be secured, protected, and then we move forward.
That's fantastic. Thank you very much. Maybe Samuel, I could come to you next. Maybe you could just give us an outline of Mi Vida Homes and what you do and where you're based. If we could start with that, please, Samuel, and your role there. And then maybe tell us what you feel bankable means in an African context, how projects can be bankable, and then we could take it from there, please.
Thank you, Jason. Glad to be here. My name is Sam Kariuki. I work for this platform called Mi Vida Homes. It was founded by Actis of UK, a private equity firm based in UK. And therefore, we are one of the fewer and larger institutional developers based in Nairobi, Kenya. Even though we are created as a Pan-African platform, so we do have ambitions to grow beyond Kenya to the region and then to Africa. When I think about bankability, I suppose, a few decades ago, one would have called bankable any project that can attract local commercial bank lending, as long as the developer has a strong balance sheet and a certain pre-sale level and can put together an acceptable collateral package. But I think that is quite limited, and over time now that that has expanded, especially in an African context. So I think I probably define bankable as financiable, without the heroics. What do I mean by that? I mean there's demand certainty, there's legal or land certainty, there's cost and delivery certainty, and in the case of rental platforms, very clear exit mechanisms. If I can elaborate on each of them, on demand certainty, I think we are talking of not just the ongoing narrative of housing deficit in Africa, in African cities, but demonstrated monthly velocities, demonstrated monthly absorption in terms of sale. If it's for rental platform, it's demonstrated sort of monthly occupancy, and as emerging recently, demand certainty that's secured by some form of institutional offtake, and that is now beginning to emerge in some of the more developed markets. So beyond the demand certainty in Africa specifically, legal and land certainty is very important. Do you have clean titles where you're developing? Does it comply with all the regulations that are needed? Because unfortunately, and the reality in Africa today is that you can still build in any manner as long as, for example, you are willing to pay facilitation fees, for example. So bankability must necessarily look at the DD, the legal DD compliance, and the whole DD package. Beyond that, when it comes to cost and delivery, are you using contractors with the right capacity? What sort of contracting and risk allocation within the contract have I applied? And therefore, I as an investor can then see that the project will be delivered. Other than the contractor, obviously, especially for institutional platforms, when I look internally, does the platform have the internal capability on project management, on delivery management to manage what otherwise would be risky? So I think when I look at, and lastly, before I forget, the ESG element. The ESG element has now become critical, and ESGDD, especially for institutional investment, has become critical. So I suppose when I put together the certainties, demand, cost and delivery, the cash flowing, the ESG elements, then I can then say here we do have, and the land certainty, I can then say here we do have a bankable project that institutional capital can price a risk and can take a risk on.
That's great. Thank you very much, Samuel. And Anna Claudia, maybe we can just make it a bit more broader, this question. So what do you think bankability means in this kind of context? How can these projects be made bankable? How can we involve the private sector? What are the incentives? Or I suppose that the question is, to what extent should the burden be on the national governments to try and provide this kind of housing and provide subsidies, and whether that is really feasible, and to what extent really can the private sector get involved? Because for the private sector to get involved, then there's got to be some commercial objective there. But obviously that is really difficult to do with the kind of housing that Africa is crying out for, which is this low-cost housing for low-income Africans. How could these millions of low-income Africans, how can we bring housing to them? Does it fall on the government to do it? Does it fall on the private sector to do it? What are the practical mechanisms that can bring housing to millions of low-cost Africans?
Well, I think ultimately it's a responsibility of the governments, right? Because, and also thinking about housing as a right, and the minimum condition for us to achieve, the sustainable goals and, the everything that we need, health standards, educational, and so on. But I do know that, the scale that we need in Africa, and we spoke before about these hundreds of millions coming, and the minister spoke about the deficit and so on. We need to count on the private sector and the big private sector, but also the SMEs. And I spoke about the diversity of typologies, and they have different requirements. Just to start with, yeah. I come from the international development sector, and sometimes when we talk about bankable projects, we talk about development banks projects. It's a different thing because it's highly subsidized, and basically what we need is some capacity and safeguards, social and environmental safeguards. Yeah, but when you talk about using the private sector throughout the value chain, the banks and so on, I think the equation has basically two variables. One is risk, and the other is demand. Simple like that. If you can manage the risks, and if you have clarity about demand, then you're going to have bankable projects. So how you can manage, and then, okay, there is a middle high income segment that's going on, that's operating. Where I live in Nairobi, in Westlands, I look every day on my window and I see buildings going up and up and up and up. So, and I imagine all these investors, they have some clarity about the demand, and they are all bankable projects, all good. But we also see the large segments of the population that don't have access to housing. So how you overcome that, right? So in terms of risks, we have to look at the land. The land must be clear. This is a big bottleneck. And when we talk about using public assets and public land, there must be this clarity as well. We can talk about risks of capacity. I think you mentioned that, right? Making sure that, the deliverable is possible, that like the company is going to build and deliver and have this capacity to go through. We are talking about, now we can talk even about environmental risks and so on. We see floods. We saw actually last Friday going on. So we have to factor this kind of climate risks and all these external factors that are coming into the conversation. But I think all of that is kind of manageable with procedures and so on, and more commitment from the government side to support managing those risks. But for me, the big point is the affordability, is the capacity to pay, and there I don't see a way out. And just yesterday we were in this roundtable in the Housing Matters with actually stakeholders from outside of Africa, and at some point from the US and from Europe, and I asked everybody in my table, so at the end of the day, do you think it's possible to have affordable housing without subsidies? And they all looked at me and said, no. So the same applies for Africa. The good news is that eventually you can produce lower costs. Like in Kenya, the cost is $10,000. So if you look at affordable housing in the US, it's $250,000 or something like that. But it all comes at the end with the subsidy that you are going to use. And let us think that housing is a great multiplier. Yeah. It generates labor, generates income. So it doesn't mean that we need subsidies forever. It means that we might need subsidies to leverage the markets, to create the trust, to make it flowing. And then at some point in the future, we might not need this, extensive subsidies. I would hope so.
That's fantastic. That's really very interesting. I think the thing is, is that subsidies, they definitely play a role, but the problem is that, as we know, a lot of African countries really have got themselves in quite a bit of debt. Yes. And it's difficult for them to find the money for those subsidies. This is, with very strained but public finance balance sheets, it's really very difficult for them to find that money. So I do think that we've got to try and be as innovative as we possibly can in with the public sector and the private sector bringing some kind of solution, especially to the low income. These millions of Africans, young Africans. Africa is so young. That really they need homes and they need some opportunity, some future that they know that they'll get a home one day. But Minister, what are you doing in Kampala? How can you encourage this sort of housing? How can you enable the private sector to construct these sort of homes? What are you doing practically in Kampala City so that the low-income people are managing to access housing so that they've got this dignity, this future? What are you doing in Kampala?
Actually, I'm happy that the question is not essentially looking at what role can we play. Of course, it is there, but this is when you come to segments, we're talking about the pricing here. Private sector is around, so they can give the details. But for me, allow me to address this question from the policy point of view, and I want to confine myself on aspects to enable viability and then affordability. Those two are very critical and shouldn't be here. You're talking of what can be put in place. Of course, in Kampala, like maybe any other city, 75% of the households in Kampala live in rented houses. And what does this mean? There are some critical focus we're putting. One, we came up with a master plan, which is well planned, trying to provide well planned residential areas. This is enrolled in the neighborhood planning so that we can guide where can we put residential areas and then workspaces and other things. Then we're looking at efficient construction materials or methods to maintain affordability, which actually Honorable Judith talked about here, because we are saying if construction materials are not affordable in terms of cost and other things, they will transfer this cost to the household, the dwellers or the consumers of the service. And indeed, that one again, you will scale up prices, which eventually will crumble and crash the entire housing industry. Then location is very key. In location here, we are talking of connectivity and then mobility, because everybody who stays in such houses or in the demand for those 70% I talked about are people of low income earning, and indeed they have to walk to their employment places, and to reduce on those commute times and then also on the cost spent, you need to improve on the connectivity. And this is why I told you we are implementing a project as I'm speaking now to improve mobility and connectivity and then workspaces provision. So we want, what we are doing is once you put all those in place, of course, price mechanism from the private sector will come in, but all this can only play a very viable role if you have enough policy, which I'll speak about, because now she chaired or financed 3 critical bills, which were very important. The Mortgage Act, Evaluation Act, which came in, and of course the Building Control Acts, which came in to guide. So, like I said, I want to confine myself there on the policy point of view, then private sector can be enhanced. Like I said, for us, it's more of putting in place enablers to enhance, because government cannot really meet all these demands in one go. 2.4 million units are very big for government to do it. We shall go back to subsidies, then after that, debt traps, and so on and so forth, which will actually have other competing requirements and needs for the communities or for the citizens. That's where we are. Yes.
Yes. Okay. Thank you very much. We've got a few minutes left. I think we'll probably go to the last question on this list. If we look ahead at 3 to 5 years, where do you expect institutional capital to enter African residential markets at scale? And what would enable that shift? Let's start with you, Samuel, if you could answer that question, please. Thank you.
Okay. Thank you. I think one way I would characterize our markets, our various markets, is that the depth of the market is on rental and rental platforms. And one conundrum we have as African markets is the structures of the economy. If I look at our country, for example, Kenya, the biggest borrower in the market is the government. And sometimes government yields, bond yields go anywhere up to 16%. And that means then whenever you approach capital markets for any investment, especially in residential, you then have to compete with high yielding government bonds to make sense. Why do I start with that example? Is that we as private developers have to somehow curate products that can allow institutional capital to participate in residential assets, despite that reality of the structures of the economy. Now, whereas in the more developed Southern African market, we have very established rental platforms like Diversity or International Housing Solutions. Outside of South Africa, it's difficult to have a full-fledged income, rental income platform because the yields are almost sub 10%, which then can't compete with government bonds. We think a solution lies in something hybrid where institutional capital can participate, hybrid funds, which somewhat can take development risk, and then move into for some time, a mid 3 to 5 year term, generate rent, but seek to exit the assets quickly. Because the longer you hold, unfortunately, the lower the long-term IRR will be. So we see a lot of institutional capital participating in funding developers by taking a bit of development risk, buying into asset portfolios that then they can look to exit within 3 to 5 years and be able to generate somewhere close to 18 to 20% IRRs. We see a lot of opportunity for mezz-type financing for developers, provided they can demonstrate they've addressed demand risk, and we do see potentially REITs over time, whether development REITs or income REITs, playing a larger role in residential, which currently they are not.
Thank you very much, Samuel. Minister, would you like to answer that question as well quickly?
Thank you very much. Like I said, government's role is to ensure that all obstacles and hindrances to affordable housing are removed or relaxed. What I call relaxation is, I gave you an example recently. She sponsored the 3 critical legal frameworks or acts, which we believe have been an obstacle to, especially to attract private investment into this sector. So through that, once all those are done, then we can have the 3 kind of transfer of resources. That is, 1, through fund structures, through PPPs, promotion of the private-public partnerships, and then put in place all the enablers to ensure that our private sector can be enhanced in terms of providing a solution to this growing need. But all this is done cognizant of the fact that government might not come in wholesomely to put itself there into the provision housing. As long as you put in place everything, that one in the next 5 years, I'm pretty sure the whole of Africa would have addressed this challenge.
Thank you very much. Thank you. I'd love to thank my panel for this session, so thank you very much. Thank you.
Thank you. Thank you very much. I didn't have a chance to talk about the housing compact. I saved for the end, but...
Oh, I'm very sorry about that.
Let's take a picture. Yeah.
Somewhere.
Maybe I can do a picture with...
Do you think we should do the picture at the end? Because this isn't the end yet. I've got
Not
one more
right now.
second. I don't mind.
I'm leaving now.
Oh, you've got to go now.
Yeah.
Okay, I didn't realise. You three together, that's fine.
Color palette. Oh, you were following it.
Let's show for video.
Let's put the women in the middle.
Women this month, you know, Women's Day.
Yes, women
Yeah, exactly.
Bright colors, yellow.
Thank you.
Thank you very much. Okay, that's great. Thank you very much. Thank you.
My name is Enis from Turkey.
And is Oscar around? Oh, there you are.
Jason,
Right, so we're going to move on to the final segment of this session, where I'm going to interview Oscar Matthews about the data center market in Africa. Oscar is works for Knight Frank. Maybe we can begin, Oscar, by you telling us your role at Knight Frank, what you do, and then we can move on and discuss data centers and digital infrastructure in Africa.
Thank you, Jason. So I am a partner in the global Knight Frank data center team focusing on EMEA. We tend to look at the investment and development angle of the data center sector, including anything from occupier services, where we act on behalf of enterprises, hyperscalers, neoclouds, deploying them into co-location facilities, advising landlords on provisioning land to sell to data center operators, and looking at everything within the investment stack for data centers, whether that be stabilized assets, capital raises, M&A processes.
Right, that's fantastic. So this session really is going to explore digital infrastructure as Africa's next major real asset class, focusing on investment opportunities, returns, and the structural factors driving data center demand across the continent. How would you characterize the current state of African data center investment? Is it an emerging opportunity or an active institutional market? So where are we at the moment in terms of data center investment in Africa, please?
I think if you look at the actual statistics behind the live capacity across the African continent, so today there is about 350 to 375 megawatts of live IT capacity across the entire continent for 1.5.
Could you put that into context for people? So what could we compare that with? What might you have in Europe, say? Or
so if you take the London market itself, that's around 1.25 gigawatts of live IT capacity, not including hyperscale self-builds. So there is a vast shortage comparatively to the population.
So let me just see if I've added that up right. So the whole of the African capacity is only about 20% of London's?
Precisely, yeah.
Wow.
That's because historically the majority of African data that is processed in either Dublin, Amsterdam or Marseille.
Yeah, I think that's what's really interesting, isn't it? That up until now, that all of that data has been processed in those three centres. Because, correct me if I'm wrong, but I think data traffic in Africa is almost doubling every year and a half. So there's so many young Africans that have now got smartphones that are, using AI for the first time, the social media for the first time. So there's all of this data being generated, but it's actually being processed outside of Africa. Is that correct?
Absolutely. I think digital adoption in Africa is the fastest in any other region of the world. And we're seeing little pockets of capacity being built in major markets across the continent. And when certain data sovereignty laws will come into play, it will demand that the majority of data processing and storage will happen within each.
I see. And now, could you outline for us where the main data center clusters are in Africa? Which cities already or countries already have data center clusters, and where you think they're going to emerge in the next 5 years or so?
So 2/3 of all the capacity in Africa is in South Africa. The majority of that is in Johannesburg, where you've got cloud availability zones for the majority of hyperscalers, and you've got a strong enterprise market from the local CBD. Outside of that, you look at the strategic locations of east, north, and west. So Kenya is probably the third largest market in Africa, with Nigeria taking the second spot.
Right, so there are data centers around Lagos, there are data centers around Nairobi, but probably not particularly big, no?
No, I think the largest one in development in Kenya is only about 24.5 megawatts.
Yeah, so it's not much. How about if we look at Northern Africa? Is there much happening in Morocco or Egypt?
So Northern Africa is a very interesting one because a lot of the European players are looking at alternative ways of servicing AI deployments for Europe. So if you look at Northern Africa, especially Morocco and Egypt, there's plenty of renewable energy. There are huge solar projects going on across both countries. And from a latency distance perspective to Southern Europe, you're very close. So you can probably look at servicing Southern Europe from Northern Africa if you can get the legislation with when data sovereignty laws come in, whether or not you can process data in one location and then the end user use it in another.
Right, yeah, so that could really create quite a big economic opportunity for those countries in Northern Africa if they could do that. And presumably one of the main reasons there is that the cost of energy is lower in Northern
Cost of energy, cost of land, cost of labour, and that all factors into the build costs of data centres, which are rocketing at the moment.
Yeah. And so if we project ahead then for the next few years, do you see most of the new data center development happening really in South Africa? Or do you think that there are some other countries where we might start to see more of it in Kenya or Nigeria? Is Ethiopia doing anything? It's a big country, very fast growing economy. Rwanda, could it get involved? What do you feel about some of these other locations?
So I think South Africa will predominantly take most of the growth just because you've got the availability zones and the cloud regions of all three hyperscalers. Some big announcements recently is Oracle have just announced a partnership with IX Africa in Nairobi, which is great news for that. So that's a new cloud region.
How big would that investment be? Do we know?
I believe it's somewhere around 5 to 10 megawatts in that sort of. So that would be, in terms of build costs, we're at about 12 to 15 $1 million per megawatt.
Okay, so it's reasonable investment, quite a lot by Kenyan standards.
Exactly. And then if you look at the actual infrastructure that supports the data center sector, you've got huge investment into subsea cables. So the 2 Africa cable, which is set to land has 22 landing points across 16 countries, trying to connect 33 countries all the way from Portugal all the way around Africa into the Middle East, and that will just direct data traffic to countries and just create a connectivity ecosystem that will drive growth and investment and more customers looking at those markets.
Yeah, because obviously the geopolitical situation's getting more complicated, and we know that I think Amazon said that 3 of its data centers in the UAE received drone strikes. But obviously the Gulf has been trying to position itself as a real data center hub, including for a lot of traffic coming out of Africa. Now, do you think that some of the hyperscalers and others might reconsider that kind of investment and may decide actually rather than channeling African data through the Middle East, maybe we should have something in Africa itself?
Yeah, it's an interesting topical point because AWS have come out and said they're considering moving capacity outside of the Middle East. And you would think that a logical choice is going to some of the African markets, especially on the eastern side of the continent. But they're actually looking at Singapore and India, because that is actually a shorter distance from a latency perspective to the Middle East. because the latency from South Africa to sub-Saharan Africa is the same as sub-Saharan Africa to Europe. So I think from their perspective, they'll look at India, but then who knows what the geopolitical state is going to be like in the rest of the world.
Yeah. Now, coming back to this sovereignty issue, which I think is an interesting one, but do you think we're going to see a number of African jurisdictions make a stand about sovereignty, and how could that force the development of data sectors in certain countries?
Absolutely. I think it's not just going to be an African-wide initiative. Globally, all countries are looking for sovereign cloud, sovereign AI, taking less reliance on Western hyperscalers who account for about 85% of global take-up. And knowing that if you are processing, developing, and running data applications within your own country, they sit under your laws, you know where they are. No one else can. There's no risk of them being hacked into from other nations, and there are a number of countries that are actually looking at the legalities of running large language models and machine learning applications in one jurisdiction, and then the end user and the inference side of that AI is actually in another country. So which legal system do you fall under? So it's a question that's being asked and running out at the moment. So, but Africa as a whole is a collection of countries have made the commitment to having at least 75% of all their data processed in country by 2030.
And that's an African Union initiative, isn't
Exactly,
it?
yeah.
I see. So, and do you feel then that it will force these data centers to develop within these countries? Because the demand is there, isn't it? There is the data.
It's the digitalization of economies, government systems going online, medical records, land registry records, all going online, which is driving data center requirement. It's just whether or not that will then. It's when especially if we look at AI deployments, it's when AI gets embedded into enterprises, i.e., not just us using chatbots and ChatGPT asking what the weather's going to be like. It's actually when they get embedded into the enterprises when they can actually monetize the AI systems.
Right, because I think that's one of the key points, isn't it? Is where you've got these big corporate clients that turn around to the data center developers and say, look, if you can develop that data center, then we will use the data. So it's signing those very big contracts. So are we starting to see that in Africa now? Are we seeing big banks and others doing that? And
yeah, so what the traditional themes of the data center sector were the major banks in all markets globally would have their own data centers. It would start off as a server room on a floor in an office, and that would just grow into its own facility. But now banks can move a lot of their applications to the cloud, so they're looking to have third-party operators run their facilities, but have what we call on-prem, so they have their own technicians controlling the data center servers from a regulation point of view. But we're also seeing, one of the biggest data center businesses in Africa, Terraco, they're developing huge amounts of capacity, but that's not only for enterprise demand, that's also for cloud demand, because building in African countries isn't as simple as some of the other established markets.
right. Now, let's quickly turn to energy, because obviously that can be a challenge. Data centers are very power hungry, but electricity is not always reliable in Africa. How's the data center developers squaring that circle in Africa?
Well, I think grid supply is struggling across the globe, but there are a number of... A traditional data center design is dual-fed grid power. So if one feed goes down, the other one can take the load, and we call it the 5-9, so 99.99% uptime. That is what data center operators promise their customers. So if there's any risk of that going down, that's why there's so much redundancy in the power support for data centers. Whereas if you look at certain markets like Nigeria, for instance, where the grid is actually used as backup, but then you look at the Kenyan grid and 85% of that is geothermal renewable power, which you would think is a really, really good box to tick for major data center operators. However, you've got to have the customer demand to justify the investment into building these things.
Right. Well, thank you very much, Oscar. We've run out of time there, I'm afraid, but that was really very interesting, and I do think there's a huge opportunity for data centres in Africa. So thank you very much for your time today, and I'd just like to thank the audience for coming along today. That was a very fruitful session on African real estate, and I very much hope that this is something that MIPIM can do every year, and we can develop the themes. So thank you very much for coming along today. Thank you.